Hey, happy Friday. I hope you are doing well. I wanted to just do a quick market update first before I forget at the end of the video. I hope you all have a wonderful Easter. As far as interest rates, mortgage rates had a nice week this week after last week's turmoil. We can see most banks are advertising about 6.87. A week ago, it was 6.97, so down about an eighth of a percent. Jumbo loans, same thing, but just over 7%, around 7.03. And then VA and FHA loans are going to be down into the mid to low sixes. So again, another eighth of a percent lower. So good week, all really stemmed by calmness in the markets, right? Compared to last week, this week was very calm. And so the normal reports came out, nothing unusual, nothing too crazy by today's standards in the geopolitical front. And so rates settled down a little bit after the move higher last week and have remained steady. So one thing I want to talk about today is or are assumptions. So I just had a great phone call with a partner of mine. She had received a call on one of her listings. It's advertised with an assumable VA loan. And so kind of, we just chatted through and I shared with her, what I'm seeing and kind of came to the realization that I have not heard of any assumptions working. Now, part of that could be that no one out of the blue would call me and say, by the way, it worked, right? But I would only hear about maybe some situations where it didn't work. So, um, my call to action for this video is, if you have an assumption that worked, would you let me know if it was FHA, VA, or maybe a jumbo loan? Because I'm very curious as clients ask about that, because what I'm seeing, the biggest issues why assumptions are not working are, one is the gap between the purchase price and the loan amount, right? So we were working through an example, right? Let's say the purchase price is 600,000, the loan amount is a $400,000 loan. That buyer has to come up with that difference, that $200,000. So since most assumptions are done on FHA and VA loans. Conventional loans are not assumable loans in general. A VA borrower typically may have a zero down payment. An FHA borrower might be expecting to buy a home with a 3.5% down payment. So in that example, coming up with a $200,000 down payment is not feasible for most. Now, that's where second mortgages can step in. They can go out and qualify for a second mortgage. Most credit unions in town will go up to 90% combined financing. That means that on a $600,000 purchase price, they'll give you a second mortgage if you can qualify for it, as long as all the debt on the home is less than 540,000, 90% of the 600. So if the loan's 400, the first mortgage, that means they can qualify for maybe a $140,000 home equity line. Now they still have to come up with the difference, another 10%, right? So does the FHA borrower or the VA borrower have $60,000 in that example to come to closing with? Secondly, once they add in a second mortgage payment, that might be $1,000 payment on a $140,000 home equity line. So is that going to be comfortable? Is that better than getting, traditional financing at higher rates? Kind of depends on the math. For every situation is a little bit different, but those are the kind of decisions that buyer has to come up with and have the data to be able to make a good decision. Okay, and then so down payment is the biggest one. Um, do they want that higher payment? That's kind of the second issue. And the third, issue that I'm seeing is I've spoken to a few agents that had VA assumable loans that were advertised on their listings, and they had dream buyers. I mean, one particularly was a veteran. They had all the money they needed to put the down payment down to cover that gap that we talked about. Great income, great employment, great credit. 90 days into the transaction, the assumption was denied. So Why is that? They never got an answer. That happened twice that I can remember in the fourth quarter in speaking to agents. One was with Chase, one was with PennyMac. Neither one, on paper, they should have qualified without any problems. Neither one really got a straight answer from the banks. So I don't know why those didn't work, but I'm curious if it's something as simple as like the banks just don't want you to take over such a low interest rate loan and would rather have you take out a newer loan. So I don't know if this is going to help anyone, but I wanted to share kind of some of the new things that I'm hearing and seeing on assumptions. If you, again, have done an assumption in the last couple of years and it was successful, please share with me some of those details because I just use that as part of the conversation, that I'm having with buyers up front when they bring that up. All right. Thanks so much. Happy Easter again, and we'll talk to you soon. Bye bye.